You do expect to see a global economic activity stronger in the third quarter than the second quarter. I know there are people here in the United States, at least, who are a bit concerned about whether that will be the case. What gives you the confidence it will?
Yeah, David, we come off of another strong performance in the second quarter in a challenging economic environment. And as Monish talked about, we're seeing Q3 improving outlook versus Q2. And that's really coming through our July sales trends. We've seen improvements across our businesses, across geographies, really early days, and a lot of uncertainty. And we're watching it like everybody else, day to day, month to month. But I'm encouraged by those early sales trends, showing that we're seeing a pickup in some of the end markets that have been so hard hit during COVID. Some of the areas like elective procedures and healthcare starting to improve, and broader industrial, even automotive, getting sequentially a little better, a little less bad in terms of build rates. So I think there's those trends are encouraging us to see it through that lens at this time.
Yeah. Well, you did have your adjusted EBITDA margin up for the quarter. Now, you've been cutting costs. I remember the last time we spoke, I think you'd unveiled the $400 million year-over-year reduction in costs. Do you think you need to take even more costs out of the business, or are you comfortable with where you are right now in terms of your expense load, Mike?
Well, it was a very important part of that strong performance in second quarter was cost management. It was across the board in the company, really taking stock of what we were seeing in the outlook. You saw the organic sales, declines in the quarter. So taking adjustment, our costs in the face of that was really important, and that was broad-based. A lot of that was, I would say, temporary, not a lot of restructuring actions in it. It was really managing our costs against those slower end markets. As we move into third quarter, we're going to continue that discipline, and we are going to be ready to act in face of whatever we see coming. But at the same time, as the economies improve and sales trends improve, we do expect to invest more in that growth. And so there'll be some of those, I would say, those temporary costs that will start to come back. But that cost discipline is going to be an important part of delivering. And we talked about an incremental improvement in margins coming from Q2 to Q3. That cost management will continue to be very important. That hallmark of solid margins, strong cash flow, and I would say managing our balance sheet, we're going to continue that as we go through the third quarter.